Markets are starting the week on a much more positive note. Over the weekend, the US and Iran reached a supposed agreement aimed at ending the recent conflict and reopening the Strait of Hormuz, which is one of the world's most important oil shipping routes. As a result, oil prices have dropped back into the $80 per barrel range after surging higher during the conflict, which caused inflation. Supposedly, this time we might actually have a deal. What are your thoughts? Drop them in the comments. While it may take some time for energy prices to return to pre-war levels, this is a step in the right direction, and it could help ease some of these inflation concerns that have been weighing on financial markets more heavily during this time. Stocks are expected to open higher this morning, treasury yields are moving lower, and the bond market is currently improving by about 17 basis points. This is helping mortgage-backed securities, and it is providing some support for mortgage pricing to start this week. Fingers crossed that it stays on this path. This will be a shortened trading week, with the bond market closed on Friday in observance of Juneteenth. The biggest event this week on this calendar will be Wednesday's Federal Reserve meeting and interest rate announcement. Anxiety. Some economists have recently suggested that the Fed may need to consider additional rate hikes due to stubborn inflation. However, with oil prices now moving lower, I'm really anxious to see whether the Fed softens that outlook or maintains their cautious stance. So, expect mortgage rates to remain somewhat volatile this week as markets digest the geopolitical developments, energy prices, and the Fed's latest comments. Every week brings a new headline, but the right mortgage decision is rarely about this week's news. It's about where you or your clients want to be a year from now. If you or your clients are planning to move, let's talk strategy. Have a great week.